This is Andrew Stotts of A Stotts Investment Research to talk about Korea Equity FVMR Snapshot, or what I like to call Korea in your hand every week. Remember, FVMR stands for Fundamentals, Valuation, Momentum, and Risk, the way I look at investing. Let's start with fundamentals of Korea relative to the world. First, we can see that Korea's ROE is about 3% below the world average at 9% for Korea. I've written before about the Korea discount. And what we can also see is that some sectors have extremely low ROEs, such as materials and industrials, which are major sectors in Korea. Also, the financial sectors has an ROE of only about 6.7%, so very low there. And it's the consumer staples sector that delivers the highest ROE. Now, dividend payout ratio is 20%, which is much less than the world's 41%. And we can see healthcare having a very, very low payout ratio, but pretty high returns for Korea on the ROE side, so they continue to reinvest it. And it's only the telecom sector that pays out more than 40%. So Korea is a very, very low dividend payout ratio country. Now let's move on to Valuation, V. And what you can see is that the PE is at a significant discount in Korea, which again, I've written about the Korean discount before. That will probably remain. So I wouldn't say that Korea is cheap based upon that 10.6. And healthcare is massively expensive right now. And utilities is very, very cheap. Now, Korea's valuation looks attractive on a 10% ROE divided by price to book. I like to look at this measure to say how much in price to book, how much in ROE am I able to buy with one unit of price to book. So we can see a pretty good relationship. Now, healthcare is pretty expensive on price to book, and financials and utilities are very, very cheap. And in the case of utilities, they're offering a 10% return on equity. If we continue on to momentum, first let's talk about earnings momentum. And earnings are expected by analysts to grow faster than the world in 2016, but slower in 2017. We can see massive amounts of growth in highly cyclical sectors as the energy prices have hit their bottom. And industrials, we should see a recovery, but from a negative base, so a recovery in 2017. And then we can also see a very negative number for EPS growth for 2016 for utilities. And then also what we can see is that the consumer staples and financial and healthcare have EPS that is about 13 and 27%. So 27% for the healthcare is massive for 2017. Korea's 1 year stock market return is 5.2% better than the world, but 2 weeks is about 3.6 worse. We can see also that the industrial sector had a really bad year over the last 12 months. And the good years have to do with energy, healthcare, and utilities. If we continue on to risk, what we can see is that infotech is net cash, while gearing is high in industrials and utilities. And we can also see Korea has been less volatile in the world as far as volatility in the market. The high volatility sector is the energy sector. And also we can see volatility in the healthcare sector. Consumer discretionary has been least volatile on both 3 month and 1 year. So that wraps up Korea FVMR, Equity FVMR Snapshot. Remember, you can always be up to date, know all the numbers, be professional, and do nothing, because all you have to do is just sign up below and you'll get this Korea Equity FVMR Snapshot to your inbox for free every single Monday.